Jeff Dorman is joining us back on the program. He's the Chief Investment Officer at Arca. Jeff, good to see you again. I want to start with the short term, all right? Because there's been some wild stuff on the intraday moves for Bitcoin. I've been watching this since like October. What's going on here where we see these big spikes to the upside and then it like drops half a second later? It's getting particularly crazy out there.
Sure, yeah, and thanks for having me back, Oliver. Good to talk to you again. We're definitely seeing some outsized volatility in crypto lately, especially with Bitcoin. But honestly, a lot of it is simply because the volumes are so much lower right now, and the amount of investors who are focused on digital assets hasn't been growing the last 3 months. So what you get is you get less players, you get lower volume, and as a result, you get much bigger swings when there is activity. Back to September, you saw a one-day, almost a 25% drop in one day. In October, you had almost a 30% gain in one day, and you've seen a lot of 10% moves here and there. So I think in general, these moves are just based on lack of liquidity right now. It is thin trading, and as a result, you're trading much more like emerging market bonds than you are equities or something like commodities.
Jeff, you come from an institutional background on Wall Street. When you talk to others who want to include Bitcoin or crypto, or they're interested in their asset allocation, moves like this, like we saw yesterday, where it goes, the futures go up basically $700 in a second. They come right back down. Then at the end of the day, they gap down. We've seen some of the off exchanges, Deribit, stuff like that, that have had these flash crashes. How much is this, limiting the interest in the overall asset class?
I don't think it's limiting interest from the institutional investors. I think institutional investors take a lot of time to do their due diligence, to do their work, to figure out what systems they can use to trade and invest in this stuff, how the back office and workflows work. So I think the bigger institutional investors, it takes 18 to 36 months for them to get really comfortable with the new asset class. And in that time period, if there's a little bit of day-to-day or week-to-week or month-to-month volatility, I don't really think that's what they're focusing on. I do think that longer term, if we are right that the institutional world is going to get more involved in this space, these moves will also become less dramatic. As you start to dilute the large players in this space who are able to push markets around and are able to cause these 20 and 30% unnatural type moves, well, again, as the amount of money outside of crypto is hundreds and hundreds and hundreds of times more than the amount of money in crypto right now. So you are going to see a large dilution of those effects as more and more money comes into this space. I think where it's more important is that this market is actually much more efficient and more mature than people give it credit for based on the price moves. Like you mentioned, there is a very vibrant options market. There is a very liquid futures market, and there is a very liquid spot market. And as a result, you can have very sophisticated players who can keep prices more in line with the ARBs that you see across these different channels. So that's an encouraging sign for institutions. They're much more encouraged by the infrastructure than they are discouraged by the volatility.
Okay. I know some of the infrastructure build out is obviously continuing. We've seen that happen. We've seen more entrants from reputable places who want to continue to offer Bitcoin related products. In terms of the money making ability though, and why people want into this space, as we see the trend turn so sharply again over the last 4 months from the June high, it starts to look like almost the echo bubble from last year. How do those two things weigh against each other? Because I know there's going to be market makers here that can make money no matter where the price goes. There's people that can obviously watch and arbitrage between the spreads that are wide. But what about the people that want Bitcoin to go up? I mean, is anybody still buying the story, Jeff?
I think people definitely buy the story, but the story has changed 4 or 5 times this year, right? You had a story that this was a store of value. Then you had a story that this was completely uncorrelated versus other asset classes.
Yep.
And then you had a story that this was actually going to be negatively correlated to other asset classes, and you needed it for crash protection. So I think there are certainly people out there who believe one of the stories, but you can't really believe all of them all at once, especially as the narrative changes. And the reason the narrative changes is because it's still new, right? There's no 20 or 40-year history to grasp onto that gives you any real confidence in any one of these stories. It is experimental. It is much more like venture capital in that regard than it is like I said, a mature equity market or a mature commodity market, in that these are experimental growth stories, not just Bitcoin, but the other digital assets below it. And as a result, it takes a long time to kind of build that consistent narrative and to build trust in what is happening. I don't think that takes away from the fact that there is interest. Right now, certainly in the last 2 or 3 months, what I would say is you look at the equity markets or the VIX in traditional markets right now, right? The market has been conditioned to sell the VIX every time it goes higher because for the last 10 years, that has been a great trade. Equity investors have been conditioned to buy every time the Fed says anything because you know that they're backstopping the markets. Well, right now, for the last 2 or 3 months, the crypto market is being conditioned to sell every rally. There is, 1,800 Bitcoin per day that is mined. There is another 1,300 Bitcoin per day that has been pretty actively being sold through what was a scam from a year and a half ago, that this is just stolen tokens that are being dumped on the market. But if you do the math, that's 3,000 Bitcoin per day. That's roughly $21 million per day. Any other asset class would easily absorb $20 million a day of supply. In fact, they would welcome it, right? Think about the fixed income market that has coupon payments or equities with dividend payments. They would love to see that kind of supply and could soak it up very easily. But in the digital asset space, because it's so new and there's just not a lot of players yet, it takes a long time to soak up that kind of supply, and that's putting downward pressure in the near term. Longer term, I don't think the story has changed. Longer term, Bitcoin is still an incredibly good growth story, as well as potentially that store of value and protection against a systemic failure of governments and banks. And I don't think that's changed just because of a couple of months of price volatility or even negative price action.
So Jeff, the use case for it though is still, as we kind of shave off some of these, or at least, as you mentioned, it changes. It seems like the one that did get popularity again this year during the bonds gold rally as well, that happened right beside it, we've been talking about it here on the show quite a bit, was of course that store of value idea. Now, given that it's for the community that sees it as a store of value, it's really a kind of a hedge against some pretty major events and kind of a thesis playing out as you described, basically, of financial institutions and essentially the kind of market as we know it going belly up in a way to where this is your best option. How long do we give that though? If we're back down at 3,000 in 2 months, or if we're back down at 1,000, is there any price where the stories at the run out of steam?
I don't think there's a price for Bitcoin where it runs out of steam. I think it's a price for equity markets and other markets where it's out of steam. If you look across every major asset class, everything is up double digits right now. You're not really searching that hard for a store of value when the equity market is up 20% or the high yield bond market is up 13% or even treasuries are up 10%, right?
So you think stocks down will be Bitcoin up? Sorry to jump in. Do you think it'll stocks down, Bitcoin up? Is that the way it's going to be?
I don't necessarily think that it happens on a real-time basis with that near-term correlation like you're suggesting. But yeah, I think that the first reason that people are going to say, I want to get into Bitcoin is going to be because the other markets start to go down. If you look back to 2011, 2012, when everybody was worried about a double dip recession, they didn't have a lot of other choices, right? Very smart investors, I think we've talked about this last time I was on, very smart investors were shorting European government bonds, whether it was Italy or Spain or Greece. They were shorting the equity markets. They were buying gold. There weren't a lot of other options to play against the market decline. Well, now Bitcoin's been in the public narrative for multiple years. It's even in the government narrative. You hear it across central banks across the globe now. Everybody now knows Bitcoin exists. If you get another hiccup in the equity markets where people now say, what are the solutions? Where can I put my money? Bitcoin will pop up in that narrative. It's just not going to happen when equities are up 25%. On your last segment alone, you just mentioned a 26% rise in Express. I can't even tell you the last time I saw an Express store, let alone the last time anybody mentioned that stock.
I can't see the last time anybody used a Bitcoin. I see more Express shirts.
Yeah, maybe we have a few around the house, probably in the bottom of our drawers.
Yeah. Hey, Jeff, quick question before we let you go, because we're almost out of time, all right? And I love having the conversation with you. One point, though, about this halving thing. Look, this can't be actual price impact anymore, can it, right? If I know a dividend's coming, or if I know a share issue is coming, that gets priced in the announcement. This is like the world's least kept secret now for Bitcoin.
It's definitely the world's least kept secret, but sometimes it just comes down to math and not necessarily expectations. In a very sophisticated market, like you said, if it's already out there, it's probably priced in. But this comes down to math. If the daily supply of Bitcoin is going to be cut in half, but the demand stays the same, that price has to go higher. So for you to say that this will not have an effect would indicate that you think demand will also go lower. And I just don't believe that. I don't believe that something this new and this small is going to see a decrease in demand simply because this is already out there and this is priced in. I think it will happen over the course of many months and potentially even a year. It's not going to happen in one day. But cutting off supply with demand constant is going to make the price go higher.
But if that's the case, then we can't also hold that idea and say that the market's maturing and becoming efficient, right? Because if that's the case, then this is not an efficient market. So that's basically the point. If you believe that halving is still going to be price positive, then you're also, on the other hand, have to say that, look, this is a totally inefficient market.
Yeah, I think it is efficient within the ecosystem in the sense that if you are trading or you're investing in this space every day, it is becoming much more efficient and much more mature in the sense that I mentioned earlier, right? You have an efficient options market, you have a futures market, you have a spot market, you have a lot of different ways to express your ideas right now.
Yeah.
But again, 99.9% of the wealth in this world is not in digital assets yet. So to say that it is efficient across the globe, it is certainly not efficient. There is so much more money yet to come into this space than there is already in this space. And as a result, that creates inefficiency.
All right. I like talking Bitcoin. It always comes down to philosophy in some way. Jeff Dorman, good chat. Appreciate catching up. Always welcome to talk some Bitcoin with us. Thanks a lot, Jeff. Appreciate it.
Great. Thank you, Oliver. Good talking to you.
Thank you, sir. Mr. Dorman is the CIO at Arca.